Hi everyone, my name is Mama Ashabis Kifli and my maiden number is 288647. As you can see, the purpose of this report is to investigate the goods and services offered by Bank in Asia. Our group decided on UOB Bank as the bank to analyze the thing they said. We are needed to select 5 different sorts of UOB Bank goods or services, which is we choose bank guarantee, irrevocable letter of credit, trust receipt, bank acceptance, and shipping guarantee. In our report, we must identify the definition of the product, what is the purpose and why the product was created, how was it created, what are the main features of the product, how the importers and exporters want to use the products, which party are directly involved in product and services, what are the obligations for each party that involved in this kind of situation, what are the rights of each party, how much does it cost to make the instrument for issuer and subscriber, and how much is there any additional price which is hidden in cost, and what is pricing system is utilized for the product and services. And the last one which is are there any formal guidelines for its establishment. UOB Bank also is one of the world leading banks. It is also rated as AA1 by Moody's Investor Service and AA- by S&P Global and Fitch Ratings. With a global network of 500 branches and offices in 9 countries in Asia Pacific, Europe, and North America, UOB Bank operates throughout Asia through its headquarters in Singapore and its banking subsidiaries. Banking subsidiaries are established in China, Indonesia, Malaysia, Thailand, and Vietnam with branches and offices throughout the Asian area.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Syafiqah Alia binti Aminuddin, matric number 275700. Okay, now I want to present on the bank warranty, which is the first product that our group choose. Okay, if for the definition, a bank warranty is a pledge made by a lending institution to compensate for a loss if a borrower fails on a loan. Okay, the warranty allows a firm to purchase item that it will not be able to afford. Bank warranty also come in a several form, which is direct and indirect warranties. For the direct warranties are used when the bank security does not rely on the principal obligation existence, legality and enforcement. Indirect warranties are most common in the export sector, particularly when government agencies or public enterprise are the beneficiary. Okay, as for United Overseas Bank Malaysia Berhad, their bank also provide bank warranty for the customer, and to apply for it, the customer can read the product disclosure sheet including the terms and condition of the offer letter, as well as for the further understanding before applying for the bank warranty at UOB Bank. Okay, United Overseas Bank Malaysia Berhad provide 2 types of warranty, which is the first one is a performance guarantee, which to support the customer performance of a contractual obligation in line with the term and condition of an underlying contract of agreement. And the second is a financial guarantee, which support the customer agreement to repay a debt or liability. Okay, moving to the purpose and why it is created. A bank warranty is a pledge made by a commercial bank to accept the liability for a specific debtor if its contractual obligations are not satisfied. So in other words, the bank offers to act as a guarantee in a transaction on behalf of a business customer. Next, bank warranty can be used by a variety of parties for a variety of purposes, which is to assure a seller that payment will be made on a specific date, and to serve as a security for reimbursing a buyer advance payment if the seller fails to produce the specific product under the contract. Okay, next is on how it is created, which I want to highlight on the procedure of the bank warranty itself. Okay, so the procedure of the bank warranty under UOB Bank mentioned that first of all, as the user, we must have an approved bank warranty facility with the bank and apply using the bank standard application form and letter of indemnity, which must be fully complete and signed by the authorized signatories. So each applicant must be supported by a copy of a guarantee format and or contract agreement if applicable. Okay, so for D is on the salient feature of UOB Bank guarantee, which is first, as a bank, UOB Bank will act as a customer guarantor. Another main feature of UOB Bank guarantee is that the guarantees are often granted in accordance with Malaysian law or upon request the uniform rules for demand guarantees, which is publication 758. Lastly, guarantees are often provided in the bank normal format in the name of a designated beneficiary for a particular length and amount, and stipulated on bank assurance to honor upon receipt of a valid written demand, so without demanding or imposing any previous condition or requirements. Then on how the importer and exporter use the bank guarantee. So as an importer, the bank guarantee can be used to bid on a commercial contract in international commerce. So, to secure a bid, an importer may need a bank guarantee from the exporter. It gives the importer confidence since the exporter bank guarantee may be structured such that if the exporter fails to satisfy the contractual commitment of the bid, the bank will refund the importer. So, from the importer's perspective, the fact that a supplier may obtain a bank guarantee indicates that the exporter has a relationship with the bank and is more trustworthy. Next, from the perspective of an exporter, the importer application for a bank guarantee protects exporter from non-payment and instills trust in the transaction. So this is because the importer bank will have performed due diligence on the importer prior to generating the bank guarantee, which implies that the bank has examined the importer creditworthiness. So the exporter might ask the importer for a bank guarantee. So this bank guarantee means that if the customer is unable to pay, the supplier will get payment from the bank. Next, on who are the parties that directly related to the product and services. Okay, for a bank guarantee is an assurance provided by a bank to a contract between two parties, which is a buyer and a seller, or in the case of the guarantee, an applicant, a beneficiary, and also a bank. Okay, the applicant is the party that requests a bank guarantee from the bank and borrows from the creditor. And the beneficiary is the parties that receive a partial guarantee, and the bank, which known as a guarantor, is a party that agrees to sign an assurance payment in case that the applicant fails to repay the loan. Okay, for the last one is on the right and obligation of each party. Okay, as a customer of bank guarantee in UOB Bank, they are expected to pay immediately upon notice by the bank. On such sum paid by the bank according to the guarantee granted by the bank, default interest at 3.5% and above, the bank-based lending rate will be levied. Following a 7 days notice to the customer, the bank reserves the right to set off any credit balance in the customer accounts against any outstanding amount. So the bank may utilize its right and initiate a recovery or legal action. The customer bank guarantee facility as well as any other bank facility may be recalled. Okay, that's all from me on the bank guarantee. I will pass to the next presenter. Thank you.
Hello and Assalamualaikum. My name is Muhammad Arif bin Ahmad Bazuri. My number matric is 27358 and I will talk about cost of creating to the issuer. Bank charge a fee for issuing a bank guarantee, which is a percentage of the guarantee amount. This fee is usually a one-time charge and is typically non-refundable. In addition to the fee for issuing a bank guarantee, there may be other costs associated with creating the instrument. For the cost of holding to the subscriber, as you can see from the table, for the first part is creation, which from 0.106% PM inclusive of any claim period with minimum RM106 Malaysia inclusive GST. Amendment from 0.106% PM on extension of expiry or increase of amount with minimum RM106 RM6 Malaysia inclusive GST. Next, amendment others or reissuance, which is RM106 flat inclusive GST. Last, non-cancellation of bank guarantee 3 months after expiry or claim date from 0.106% PM depending on commission rate charged inclusive GST. Pada part risk and return for subscriber, the main benefit of a bank guarantee is that it provides of a level of financial security. A bank guarantee can be used as a form of collateral or as a means of ensuring payment for goods or services. There are also risks associated with bank guarantees for the subscriber. One risk is that if the party for whom the guarantee is issued fails to fulfill their obligations, the subscriber may be required to pay the guarantee amount. This could result in financial loss for the subscriber. For risk and return for issuer, a bank guarantee is a promise from the bank to cover a borrower's debt or obligation in the event that the borrower is unable to do so. The potential financial loss if the borrower default on underlying debt or obligation, the bank will then be responsible for paying the guarantee amount to the beneficiary. The returns for the issuer will come from the fees charged for providing the guarantee. These fees may be a one-time charge or a recurring charge depending on the terms of the guarantee. Additionally, issuing a bank guarantee can help the issuer establish a relationship with the borrower, which may lead to future business opportunity. It is also important to note that bank guarantees are not the same as loan. Banks do not lend any money but only provide a guarantee for the borrower's debt or obligation. In case of default, the bank will have to pay the guarantee amount to the beneficiary. Next, I will continue about the other cost element. The bank charge a quarterly fee that ranges between 0.75% and 0.85% for financial guarantees and 0.45% and 0.55% for performance PG, which is bank guarantee. In addition to the fee for issuing a bank guarantee, there may be other costs associated with the use of a bank guarantee, such as annual maintenance fees, amendment fees, cancellation fees, early termination fees, and interest charge. Next is pricing mechanism. As you can see from the table, for the first is issuing fee from 0.1% PM or part thereof, including any claim period with minimum RM100 Malaysia. Minimum fee involving increased amount and or extended validity from 0.1% PM or part thereof on the extended validity and or increased amount with minimum RM100 Malaysia. Revision and other amendment fee, which is RM100 Malaysia. And lastly, non-cancellation fee for 3 months after expiry date or claim end date, which from 0.1% PM or part thereof. And the lastly is official guideline for its establishment. UOB Bank, like other bank, likely has internal guidelines and procedures in place for the establishment of bank guarantees. These guidelines may include information on the types of guarantees offered, the documentation required for a guarantee application, and the credit approval process. In addition to internal guidelines, there may also be regulatory guidelines in place that UOB Bank must follow when issuing bank guarantees. This regulation may vary depending on the country or jurisdiction where the bank is located. That's all for me. Thank you.
Assalamualaikum, my name is Abdul Hisham bin Abdul Ghani and my metric number is 273310. For my part, I will present on the revocable letter of credit. Letter of credit is an irrevocable written conditionally undertaking given by the bank and to the seller for an account of the buyer to pay the seller certain sum of money as stipulated in the LC upon compliance with the term and condition. And the purpose of this irrevocable letter of credit is an agreement where the buyer bank agree to pay the seller as soon as certain conditions of the transaction are met. A revocable letter of credit is created to facilitate the international trade. Due to the nature of the international dealing, including factors such as a distant, differing law in each country, and difficult in knowing each party personally, the use of letter of credit has been becoming a very important aspect of international trade. And how this irrevocable letter is created is the user will need to have an approve of LC facility with the bank. An application must be made in the bank standard application form. Duty completed and signed by the user authorized signatory, and each application to be accompanied by the copy purchase order or sales contract if available. And what are its selling features? The LC are issued subject to the Uniform Custom and Practice for Documentary Credit, Publication 600 UCP. Uniform Rule for the Bank-to-Bank Reimbursed, Publication 725, and it's further guided by the International Standard Banking Practice, Publication 745. And the LC may be issued to be payable at sight or usance, and always provided the term and condition of the said LC are met. And the LC are issued to secure the purchase or import of good or service in RM or foreign currency denomination. And the LC instrument is independent of underlying commercial contract between the seller and the buyer. And lastly is payment under LC may be further financed provided you have to prior approved trade financing facilities with the bank. And how does an importer and exporter use it? For the exporter, an exporter can use the LC as a guarantee for a payment from the importer. The exporter will present the required document to the issuing bank, and upon the compliance with the term and condition of the credit, they will receive payment from the bank. And for the importer, an importer can use this LC as guarantee payment to the exporter. The importer will typically apply for LC through their bank, specifying the term and condition of the credit and the required document for payment. Once the LC is issued, the importer will provide it to the exporter as a guarantee for payment. And there are 6 parties that is directly related to this product and service. For the first one is importer. The importer is the party who apply for the LC through their bank, and they also the party that will ultimately make the payment to the exporter. For the second one is the exporter. The exporter is the party that will receive the payment from the importer through the LC, and they are also the party that will ship the good or provided the service to the importer. For the third one is the issuing bank. The issuing bank is the bank that issue the LC on behalf of the importer, and they are responsible for verifying the compliance of the term and condition of the LC and making the payment to the exporter. For the fourth one is the advising bank. The advising bank is the bank that advised the exporter of the LC. They will check the authenticity of the LC and confirm it to the exporter. For the fifth one is the confirming bank. The confirming bank is the bank that confirms the LC to the exporter. They add their own confirmation to the LC and take the responsibility of the payment to the exporter. And for the sixth one is the beneficiary bank, the bank where the exporter has an account. That bank will be called as the beneficiary bank. And what are the obligations of each party? They are required to pay immediately or accept the pay on the maturity date upon the notification by the bank following the receipt of shipping document that comply with the term and the condition of the underlying LC. If the shipping document are discrepant, did not comply with the LC term and the condition, you must decide promptly whether to take up or reject the shipping document upon the notification by the bank on the discrepancies noted. And what are the rights of each party? For the importer, they has the right to specify the term of the condition of the LC, such as required document for the payment and the expiration of date. The importer also has the right to cancel and amend the LC, but only with the agreement of all parties involved. For the exporter has a right to present the required document to the issuing bank and receive payment in accordance with the term and condition of the LC. The exporter can also transfer the credit to the third party. And for the issuing bank has the right to verify the compliance of the term and condition of the LC, make payment to the exporter. The issuing bank is also responsible for ensuring that the importer has the necessary fund to cover the payment. For the advising bank has the right to verify the authenticity of the LC and confirm it to the exporter. For the confirming bank, they have the right to add their own confirmation to the LC and take the responsibility of payment to the exporter. And lastly, for the beneficiary bank, the bank that hold the account of the exporter has a right to collect the payment from the issuing bank.
Assalamualaikum warahmatullahi wabarakatuh. My name is Novarisha Azura binti Muhammad Nafi, metric number 275435. Okay, next I will present about the cost of creating irrevocable letter of credit to the issuer. The first one is letter of credit issuance fee. The issuing bank need this fee to open a letter of credit. Next, advising fee. The fee that the advising bank requests in order to inform the beneficiary of the credit. Discrepancy fee. The issuing bank will deduct a specific amount from the letter of credit proceed if the beneficiary supply inconsistent documentation. Next, confirmation fee. The cost charged by the bank providing the confirmation to the credit. Next, amendment fee. The confirming bank may charge the cost if the letter of credit is changed. Handling fee. Bank charge handling fee for delivering rapid message and holding documents. And the last one, reimbursement fee. The cost incurred in settling the credit amount between the issuing bank and the confirming bank. Okay, next I will present about the cost of holding the instrument to the subscriber. As you can see, the following costs that the subscriber must cover are issuance fee and discrepancy fee. The bank may occasionally change the commission, interest rate, fee and charge at its sole discretion, provided that it gives them at least 21 days notice. Okay, next, risk and return to the issuer. Exporter, importer and banks are the key players engaged in the letter of credit procedure. Banks are subject to lien transaction, security risk exposure. There are a few different kinds of risks associated with letter of credit transaction. The first one is the danger of not being reimbursed after making payment to the beneficiary, which is related to the customer's financial situation and credit history. Second, the nature of the traded product may cause the account party to become bankrupt due to the high degree of price fluctuation. And finally, it is probable that the issuing bank will not be compensated. So, Bank of Exporter should investigate the dependability of issuing, verifying and negotiating banks abroad. Next, risk and return to the subscriber. First, since banks simply deal with documentation, they are under no responsibility to confirm the quality of import goods. Second, delay in clearance could cause perishable items to lose all of their value. And the last one is, if you fail to pick up your shipping documents on time, you have to pay demurrage fee when your items are eventually clear for delivery. Okay, next, other cost element. The cost of a letter of credit typically range from 0.25 to 2%. Loans can frequently be obtained from the involved bank in order to obtain such letter of credit, which are frequently utilized for significant international export and transaction. Besides that, a letter of credit also typically costs 0.75% of the total transaction price. The letter of credit commission may occasionally be as low as 1.5%. The cost of the letter of credit is normally borne by the buyer. These include fee for courier service, bank and wire transfer costs. The seller should anticipate paying 5 to 10 fees by the time the transfer is finished, with the majority costing between $25 and $150. And then the pricing mechanism. This is the pricing mechanism for import and domestic purchase. There are letters of credit that consist of issuance fee, amendment fee, and other amendment fee. Second, inward bill under letter of credit consists of issuance acceptance fee. For the export, there are letters of credit that consist of advising fee and confirmation fee. And the last one is the official guideline for its establishment. Since ancient times, letters of credit have been utilized in Europe. The first uniform custom and practice for documentary credit, which is called UCP, which established a voluntary framework for commercial banks to use in transactions all across the world, was created in 1933. Travelers would frequently carry circular letter of credit, which permit the beneficiary to withdraw money from various banks along their route in the late 19th and early 20th centuries. Banks started moving to electronic data interchange in 1973 with the founding of SWIFT as a cost-saving measure, and in 1983, the UCP was changed to allow teletransmission of letter of credit. By the 21st century, virtually all letters of credit were issued electronically and completely paperless. Letters of credit were becoming more typical. That's all for me. Thank you.
Assalamualaikum and hi everyone. My name is Nur Syafiqah binti Omar and my matric number is 288459. The next product is trust receipt, so I would like to present about the definition of trust receipt, the purpose, how it is created, the features, how does an importer or exporter to use it, the parties related, the obligation and the rights for both parties. Trust receipt is a short-term working capital facility extended by the bank to a customer that facilitate the financing of their purchase or import of goods under letter of credit or collections. The next one is the purpose. One of the purpose of trust receipt is trust receipt acts as promissory note to the bank. It is intended to indicate the relationship of trust between the banker and importer. Trust receipt also being used for the importer that needs the immediate financing to import their goods, where trust receipt will let the importer take the ownership of the items without instantly parting with their own money. So, how it is created? These goods may either be purchased locally or imported from other companies. Thus, the firm does not have the required cash on hand to settle the bill. It may obtain financing from a bank via a trust receipt. In terms of the settlements instructions, it will be provided to UOB Bank for the incoming import documents. If the buyer cannot make the settlements of the payment, the buyer can use the import financing provided by the bank under the trust receipt arrangement. Next, what is the features of trust receipt? This financing provides an easy loan for the importer, whereas the banker will pay the exporter's bank for the importer to get the rights to collect the goods. Throughout the process of trust receipt financing, importers are also not required to provide any collateral to the bank. The financing rate is connected to the bank's current base lending rate (BLR) plus a margin which is specified during facility construction. The importer is responsible for selling the products and making a full repayment to the bank of the amount owed plus interest on or before the maturity date of trust receipt using the profit from the sales of the goods. Thus, the importer also given the flexibility to do the early repayment before the maturity date of the trust receipt. So, how does an importer to use the trust receipt? The importer is given a credit period to dispose of the goods and repay the bank out of the proceeds of sales on or before the maturity date of the trust receipt. On the due date, the customer pays the amount due plus interest to the bank. In addition, most banks in Malaysia normally charge the base lending rate. In short, these types of financing provides 100% financing as well as allows the importer to make payments to the bank prior to maturity. There are three parties related in the trust receipt. For the first one is importer. Importer is the person having or taking the possession of goods, document and instruments. The second one is exporter. Exporter is the person who holding the title over the goods, document and instruments. And the last one is bank. Banks receive the application of trust receipt from the importer and produce a trust receipt as well as send it to the importer. So now the obligation for the importer, they are obligated to make sure the relevant documentation submitted to the bank for their funding must be based on the actual and ongoing business transaction. For the bank, UOB Bank needs to provide the importer complete autonomy in determining the selling price of products and any other condition associated with the sales. The last one is the rights for both parties. For the importer will be granted authorization to sell the products and will serve as the bank's representative in the transactions, while the bank has the legal right to demand repayment from the importer of the amount of the advance that was given to the trustee, together with any interest and commission that was agreed upon. That's all for my part. Thank you.
Next, we are going to continue this presentation of trust receipt. But before that, let me introduce myself. My name is Nur Farhani Abdul Wahid, 288583. Now we were going to look at the cost of creating the instruments to the issuer, and on this case, the issuer is UOB Bank. Some importer might face the problem of not having enough funds to import their goods. Then they will resort to the bank to get financing. Bank will then lend the money to the importer but retain the ownership rights of the goods to the importer. Under this trust receipt term, importer is agreed to repay the bank on the maturity date from the money that is earned from the goods that is being sold. Thus, the bank will pay the exporter the cost of the goods based on the invoice value upon the delivery of the goods. Apart from that, we were going to look at the cost of holding the trust receipt to the subscriber, which is the importer. In order for the importer of the trust receipt to redeem the trust receipt, importer should make the payment that is also being known as a principal with an interest and the commission fee that is being charged by the bank. If the goods can be sold by the importer to repay the bank before the maturity date, there will be a penalty charged to the importer. Next part is we were going to look at the risk and return to the bank and the importer. For the bank, most likely risk that is going to be faced by the bank is credit risk. Credit risk is also known to be the major risk of the bank, where the borrower is not repay their loan to the bank. It will give a bad effect on the bank revenue and will turn to give a negative effect on bank's balance sheets and overall performance because from this financing, banks supposed to receive the money in form of the principal, interest, and commission or fee. For the importer, they will be exposed to the shipping and transfer risk, where there is a possibility of the goods that is being shipped is substandard or short shipment happen. If this sort of thing happen, importer might have a problem to go and repay the loan to the bank because the revenue will be much lower than usual and they will face a difficulties to repay the bank. Now we go to the last part of the trust receipt, and we were going to look at the cost and pricing analysis. The interest that should be paid with the principal amount on the maturity date is calculated as the formula stated above. The base lending rate is a variable rate where if there is any rise in the base lending rate, it will result in a higher payment and vice versa. Under this cost and pricing analysis, as we discussed before, customers of UOB Bank should also pay the direct reimbursement fee and also a stamp duty charges alongside with the interest and principal of the loan. And that's all from me. Thank you.
Hi, my name is Muhammad Najmi bin Abdul Wahid. The metric number is 2X5055. The product we want to discuss is shipping guarantee, or we can call SG. SG is one of the product or service offered by UOB Bank, where this SG is a guarantee or indemnity issued by the bank representing the importer, namely UOB Bank, to the shipping company. This SG authorized the shipping company to release the good to the importer without submit the bill of lading and other relevant document. Among the reasons why SG was created was to speed up the release of cargo from ports. This is to ensure that order items are received in good condition. In addition, the use of this GV service can also help avoid being charged demurrage fee if the ship arrives before the shipping document obtained. A demurrage fee is a fee charged to the importer if the importer failed to pick up their goods within the allotted period after the arrival of the goods. In creating a shipping guarantee, there are several procedures that must be followed by the parties involved. Firstly, the importer needs to submit an SG request application from the importer bank, which is UOB Bank, and after that, the bank will check all the application documents such as a copy of invoice and bill of lading, and once passed, UOB Bank will hand over the SG to the importer. Secondly, the importer will send the shipping guarantee to the shipping company to enable the importer to pick up the goods from the carrier and transfer the cargo to their warehouse. Thirdly, the next process, the bank will request the BL, which is a bill of lading, from the importer. So the importer will bring the original bill of lading from the shipping company for SG exchange at the bank. Thirdly, the importer will return the SG to the bank for release of obligation. And now, we go to parties that directly relate to the SG are importer, UOB Bank as issuing bank, and shipping company. Obligation for importer is that they must pay UOB Bank when money is demanded. This is because if SG user do not pay UOB Bank, it can cause all parties involved in SG become worse and have a negative impact on exporter about importer. In addition, another obligation is to indemnify the bank for all liabilities arising from the issuance of SG. Next, SG user at UOB Bank must immediately redeem the SG from the shipping company to be handed back to the bank for the obligation termination process. Next, we go to obligation for second party, which is UOB Bank, where UOB Bank act to issue SG so that the applicant, which is the importer, can pick up their good at the port. And next, the bank also need to immediately terminate the obligation after receiving SG back. Obligation for last party, which is a shipping company, will bring the goods ordered by the importer from the exporter, and the shipping company will hold the goods until the importer present the delivery document or shipping guarantee. The shipping company has to submit the SG to the importer again for the importer to submit the SG to the importer bank. That's all from me. I will pass to the next presenter.
Actually, they have a cost of creating the UOB bank shipping guarantee. To the issue which is to create shipping guarantee, there are some charges imposed by UOB bank that must be paid by the customer. The first is the commission. The commission under shipping guarantee is charged at 0.106% flat for the first 3 months, with a minimum of 100 ringgit Malaysia, while 0.53% per annum with a minimum of RM100 ringgit. Is charged if the shipping guarantee is not returned to the bank after 3 months from the shipping guarantee issue date until the shipping guarantee is returned for the cancellation. For the advance endorsement fee, a flat rate of 0.1% with a minimum of 100 ringgit is charged. The cost of holding installment, which is UOB bank shipping guarantee to the subscriber, is if the importer fails to carry out his responsibility where the importer does not have sufficient funds to settle the amount claimed under shipping guarantee. The bank will charge a default interest rate of 3.5% per annum above the bank base lending rate on the amount paid by the bank pursuant to any shipping guarantee issued by the bank. Next, the bank will also charge a penalty commission according to the current UOB bank tariff if the customer is late to redeem within the shipping guarantee. Further, unredeemed shipping guarantee may prevent the importer's future withdrawal from the importer's trading facility with the bank. Among other effects, if the importer fails to fulfill his responsibility, all the facilities given to him by the bank will be withdrawn. UOB Bank will act according to the bank's right to initiate a legal action recovery process, but not limited to bankruptcy of the customer account if the outstanding amount reaches a certain limit. The consequences of being punished for bankruptcy can result in the freezing and confiscation of assets. Action taken by the bank can also affect the credit ratings, making credit more difficult or expensive. The bank also has the right to use any credit balance in the importer's account maintained with the bank to settle any outstanding balance in the imported account. Any rejection made by the bank will be notified to the customer first before it is made. All the instruments that have been used always have a risk and return. Same goes to UOB bank shipping guarantee. The risk and return UOB bank shipping guarantee to the issuer which is importer of shipping guarantee will faces is they will lose protection and are obligated to make payment under the letter of credit, which is LC, or collection bill once the shipping guarantee is issued, even if the papers and product letter received included abnormalities or contradictions. This is because when they have already received the shipping guarantee, it means they agree and will be completely responsible for all the product that they will receive, even though the product may have defect or any problem when the product is on the way to the buyer. When the bank receives a claim filed against shipping guarantee, it will proceed to pay the shipping company and may debit your account for the amount claimed, even though the subscriber is completely responsible for the product that they buy from the exporter. The subscriber still can report if the product they get is completely damaged. This is because the exporters need to know to refund all the damage or half of the damage and improve their packaging in future. Only upon return and discharge of shipping guarantee by the shipping firm, or when the accompanying import documentation for the original bill of lading or when we receive approved by the bank are either paid or acknowledged by you, is the shipping guarantee responsibility released. If the shipping guarantee is issued in foreign currency, the exchange rate will fluctuate. This is used for their subscriber to pay their product in their own currency, exporter currency or third-party currency. As you guys know, all currency in this world fluctuates, so it is hard for them to pay for the products that they buy. The risk and return that shipping company faces is that by accepting the shipping guarantee agreement for the importer, they are agreeing to take complete responsibility for the goods that are being shipped to the shipping company. This is due to the fact that when the shipping firm receives the paperwork, it implies they agree with everything in it. Simultaneously, if something occurs to the imported products, the shipping business and the issuing bank will face the entire damage, while the importer will incur no losses. They also have the other cost element which are hidden costs when they use UOB Bank shipping guarantee. The hidden cost is the fees in lieu of foreign exchange is a fee 0.125% of the invoice amount with a minimum of 10 ringgit for import invoice. SWIFT imposes a fee of 20 ringgit for local taxation and 50 ringgit for international taxation. Domestic taxation notice or advice cost 20 ringgit, whereas overseas taxation notice or advice cost is 50 ringgit, while interbank gyro IBG costs 1 ringgit, when tax costs 9 ringgit. Since March 2019, UOB Bank has charged cash orders of 5 ringgit 65 cent, local carrier service of 20 ringgit, and international carrier services ranging from 50 ringgit to 150 ringgit. The bank last fee to the consumer is shipping, which can cost up to 10 ringgit. Fees or charges quoted by various banks are exclusive of any government taxes that may now or in the future be imposed by the Malaysian government. Taxes and fees imposed by the government are the result of changes in law or other factors. The bank will not refund any commission paid by the customer to the bank in the event of an early cancellation or return of any shipping guarantee. The pricing mechanism used by UOB Bank for imported to the currency ship and payment due is detailed in the table.
Okay, Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Iman Al-Hakim Negeri. My metric number is 270089. Okay, first I want to present about the introduction for next product, which is banker's acceptance. For definition, a banking acceptance is a type of short-term debt instrument that is issued by a bank and guaranteed by the bank creditworthiness. This is typically used by companies to raise capital for short-term needs, such as inventory or accounts receivable financing. Banking acceptance are typically issued for term of less than 1 year and are often used in international trade transactions. The issuing bank, which is UOB, guarantee payment of the banking sector at the maturity, and the instrument is typically sold at in discount to face value. For this next is about the purpose and why is it created for banking acceptance. The purpose of banking acceptance is to provide company with a way to raise short-term capital for their business needs. Banking acceptance are commonly used in international trade transactions as a form of payment or financing. For example, a company that import goods from another country may use a banking acceptance to guarantee payment to the foreign supplier. A banking acceptance is created when a company approaches a bank and requests that the bank issue by the banking acceptance on its behalf, that the bank will accept the company creditworthiness, and if it deemed accepted, the bank will issue the banking acceptance. The company can then use the bank acceptance to secure financing from other investors or financial institutions. About how the banking acceptance created. A banking acceptance is created when a company approaches a bank and requests that the bank issue a banking acceptance on its behalf. The company must first provide the bank with documentation outlining the detail of the transaction for which the banking acceptance is being requested, such as the amount of the acceptance, maturity date, and the purpose of the fund. Once the bank receives the request, it will assess the company creditworthiness by reviewing in financial statement, credit history, and other relevant information. This is to ensure that the company is able to repay the banking acceptance at maturity. If the bank determines that the company is creditworthy, it will then use the banking acceptance. The BA will typically issue at a discount to face value, and the company can use it to secure financing from other investors or financial institutions. The assumed bank guarantee payment of banking acceptance at maturity. The instrument is typically sold at a discount to face value. The company can use then the process from the sale of the banking acceptance to finance its short-term business. In summary, a banking acceptance is created when company approach a bank and request that the bank issue is a banking acceptance on its behalf. The bank will assess the company creditworthiness, and if it is deemed acceptable, the bank will issue the bank. Okay, there are the excellent feature for banking acceptance. The banking acceptance include the short-term maturity. They typically have a maturity of less than 1 year, is making a short debt instrument. Second is guarantee by the issuing bank. The issuing bank guarantee payment of the banking acceptance at the maturity and making it low risk investment. The third one is issue at a discount. Banking acceptance are typically issued at a discount to face value, which means that the holder of the BA will receive less than the full face value in maturity. The fourth is use in international trade. BA are often used in international trade transaction as a form of payment or financing. Next is low interest rate. Banking acceptance are considered to be low risk investment because of the bank guarantee, and as a result, they often carry a lower interest than other short-term debt instruments. Next is negotiable. Banking acceptance are negotiable instruments, meaning they can be bought and sold in the market secondary and providing liquidity for investors. The last one is trade in secondary market. Banking acceptance can be traded in secondary market, providing liquidity for the investor. For how does an importer or exporter use it? For importer, a banking sector can be used as a guarantee of payment to the foreign supplier. The importer can request that the bank issue in a banking sector on its behalf, and the foreign supplier will accept the banking acceptance as a guarantee of payment for a good being imported. This allows the importer to secure the good from the supplier without having to pay from them upfront. For the exporter, a banking sector can be used as a form of financing for the good being exported. The exporter can request that a bank issue in a banking sector on its behalf, and the foreign buyer will accept the banking sector as a guarantee of payment for the good being exported. This allows the exporter to receive payment for the good before they are shipped. In both cases, the issue bank guarantee payment of the banking asset at maturity, making it a low risk form of financing or payment. The importer and exporter can use the process from the sale of the banking asset to finance them. For the next part is about the parties directly related to the product and service for banking acceptance. There are several parties that directly related to banking acceptance, product and service. The first one is the importer and exporter. The importer or exporter is party to the initiate the request for the banking acceptance. They are the one or who will use the banking acceptance to secure financing or payment for the good and service. The second one is the issuing bank. The issuing bank is the financial institution that issue the banking acceptance on behalf of the importer or exporter. They are the one who guarantee payment on the banking acceptance at maturity. Next is the foreign supplier and buyer. The foreign supplier or buyer is the party that the importer and exporter is doing business with. They are the one who will accept the banking acceptance as a guarantee as payment for the good or business service being traded. The next one is the investor or financial institution. The investor or financial institution that purchase the banking acceptance from the importer or exporter, they provide financing to the company by buying the banking acceptance at a discount and get the face value at maturity. In summary, banking acceptance product service is related to the importer or exporter, issuing bank, foreign supplier, investor and secondary market trader. The next is about the obligation for each party. The obligation of each party involved in a banking acceptance can vary depending on the specific term of the banking acceptance and the nature of the transaction. However, it's regularly the obligation of each party are as follows. The first one is importer or exporter. The importer or exporter is obligated to provide accurate and complete information to issuing bank regarding the transaction from which the banking acceptance is being requested. They are also obligated to use the process from the sale of the bank BA from the purpose for which is intended and repay the banking acceptance at maturity. The next is issuing bank. The issuing bank is obligated to assess the credibility of the importer or exporter to issue the bank acceptance only in determining that the importer or exporter be able to repay the ratio and maturity. The next is foreign supplier. The foreign buyer or buyer is obligated to accept the banker letter as a guarantee of payment for a good or service being paid. The last one is investor or financial institution. The investor or financial institution are obligated to purchase the banker acceptance at the agreed open price and hold until maturity. They are also obligated to honor the term and condition for the banking acceptance. That's all for me. I will pass to next part to my friend Kishan.
Hi, my name is Kishan Kumar Krishnan. My database 277273. So my part in this assignment is cost of creating the instrument to the user. So first of all, we have some fees and charges. So first of all, issuance fee, the amount or rate from 0.1% PM or part, therefore inclusive of any claim period with minimum 100,000 or 100 ringgit. Then second one is other amendment fee, something like 100 ringgit only, and non-cancelling fee for 3 months after expire claim and end date. It's from 0.1% PM or part of therefore. Okay, the second one is cost of holding the instrument to the subscriber. Okay, first of all, stamp duty is like 0.15 cent, something like that. Check processing fee 50 cents something, and stamp duty on checkbook 50 cents, something like that. And monthly service charges, borrowing account with average balance 2000 is like 5 ringgit only. And sometimes half year service charges, borrowing account with average balance like more than 1000, this will be like 10 ringgit. Thank you. Okay, the second one is risk and return to the user. So we have two kind of risk. First one is risk of transaction. Transaction risk imposes a variety of factors including product development and delivery, transaction processing, system development, computer system and comparative of goods and services, and an internal control environment. So second one is credit risk. Credit risk is the potential trade, the earning or capital that could arise from an obligor, breach of agreement with a bank, or other failure to adhere to the term of agreement. So the third one is risk and return to the subscribers. So we have some kind of risk. The greater risk is point is the financial institute will have to pay out the breach sum. The bank is the party most at risk for this. This buyer can be required to provide collaborate by the bank and pressures. Okay, the last one is pricing mechanism. If a corruption wants further protection for the country party risk, it might be asked the bank for time block to call the bank acceptance. The financial institution promised to pay the exporting company specific amount or specific date, after which it will be debit importer account to pay for the expense. So it's mostly February 1. So bank serves the same purpose, and check with the date of February 1 cannot be cases deposit until the next month if it's today, January 1. This may be thought as a deadline for making a claim on someone else's property. Then the conclusion of the banker acceptance is in conclusion, while there is a non-specific official guideline for the establishment of the bank acceptance, the process of creating and issuing a bank acceptance generally follow a set of industry standard producers and best features. So it is important to keep in mind that regulation standard and law may vary by the country, and banks should be aware of this when issuing bank acceptance. That's all. Thank you so much.
For conclusion, knowing the trade financing product and service offered by the UOB Bank can be important for the business that engage in the international trade. And this product and service can help the business manage the financial risk associated with the exporting and importing goods, and can also help them access the capital they need to grow their international trade operation. And there are many trade financing products offered by the UOB Bank, but our group only focusing on bank guarantee, irrevocable letter of credit, trust receipt, banker acceptance, and shipping guarantee. By understanding the trade financing product and service offered by the UOB Bank, a business can select the option that best meets its need and can help it to manage its cash flow, reduce its exposure to the currency fluctuation, and manage its credit risk. That's all for our group. Thank you.